Two-way risk sounds to like markets up, markets down. What do you mean by that?
Well, it's not getting any easier. Okay, let's put it that way. I mean, this has been. I think the first half of this year was, fairly simple if you just were bearish and kind of held that position. And then, we've had two major, tactical rallies since June, the first one, and then of course one in October. This one actually has better breadth, which is kind of interesting. And so I do think we're closer to the end. I mean, we don't know when the Fed's going to pause. We think it's January. I think they do 50 in December, 25 in January, and that's it. Okay, that's ahead of where the market is. And the market's trying to pre-trade that, kind of like it did this summer. Now, we thought it was premature this summer to get in front of that. This time, we actually think there's validity to that. The question is, what are you going to pay for this thing if you think earnings are going to be really disappointing next year, which is our core view? So, we're trying to have our cake and eat it too. We like to do that, right? So we're having a tactical rally now. I kind of agree with Steve. We probably got some upward bias into year end. But ultimately, the bear market's not over, and we got significantly lower lows if our earnings forecast is correct.
Yeah, so 2023, your price targets are out. 3,600 is your bear case, 3,900 is the base, and 4,200 is the bull case. What's the rate expectation backdrop to these cases?
Yeah, so it's probably somewhere between 275.3 if it's a recession to maybe 4.25 if there's a reacceleration in the back half of the year. I'd probably split the difference. I'd probably say it's 3.25, something like that. Look, to me, it's not about the year-end targets. It's about the path. Right? I mean, nobody cares about what's going to happen in 12 months. They need to deal with the next 3 to 6 months. And that's where we actually think there's significant downside. So while 3,900 sounds like, that sounds like a really boring 6 month. No, this is going to be challenging.
It's a wild ride.
It's going to be a wild ride. And there's going to be a lot to do. I'd say the best thing I can say is, the breadth's getting better. The average stock is doing better than the index. And there's going to be probably stock opportunities going forward as opposed to just trading the index.